Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to go ahead and be covering the M1 Finance dividend portfolio. We're going to be reviewing all 30 stocks within the M1 Finance portfolio as of November 2021. We're going to go ahead and hit 5 topics first. Number 1, we're going to go ahead and go over the M1 Finance overall performance. Number 2, we're going to go ahead and cover the weekly performance of the M1 Finance portfolio versus the 3 main index, the S&P 500, the Dow Jones, and the Nasdaq. We're also going to be taking a look at the current activity as far as recent buys, sells, and dividends. We're going to go ahead and cover the current portfolio dividend income as of today. And we're going to go ahead and cover number 5 as far as what stocks we're planning on buying. Now, I'm going to be reviewing all 30 stocks within our portfolio, just essentially really quickly. Hey, Benito, welcome to the stream. Definitely want to reply back to you saying hi. But we're going to be taking a look at all 30 stocks within our portfolio. And if you guys are interested in taking a few stocks, mentioning them in chat, we'll take a look at them here towards the end as well as we're reviewing all 30 within our portfolio. So with that said, if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. So really quickly, jumping over into the M1 Finance portfolio, we can see that we are now at an all-time high, essentially. Our return is back up where we had originally had it in the past at 77%. So we're right up there once again, and our portfolio has recently broke over $40,000. So overall value in the M1 Finance portfolio is at its peak, and we have $427.37 sitting in cash. So the portfolio has been doing really well overall. We can see here as we scroll down, sort this by our gain and losses. We can see the Apple is up. Number 1, Apple's been on fire over the last several years since we created this portfolio. So it is up nearly 300%. It shows here in the portfolio, with Lowe's about half of that at 174, Main Street Capital at 163. So those are our top 3 winners as far as the portfolio goes overall. As we scroll down here towards the bottom, we can see that our top 3 losers are currently still the same. Last place, we have Clorox down 33%, but again, I don't know if that's very accurate. I would have to just bust out a calculator and kind of see. I can actually do that really quickly. Let's go ahead and bust out a handy dandy calculator. I put about $2,000 into it. If I take away 33% of that, so that's pretty much incorrect right there. As far as the percentage loss right there, that's incorrect. So I don't care much about the percentage losses. I'm just kind of looking at Clorox long term. I believe they have a lot of products that are household names. I know we use a lot of Clorox products within our household, so I'm not worried about them as a company. Just going belly up. So it'll go up over time. Not worried. Hormone Foods and Colgate down as my other 2 negative positions in the portfolio. Whereas everything else is kind of in between. Everything in the market always fluctuate up and down on a daily, weekly, yearly basis. So you're going to go through cycles within every sector out there. So that is the overall performance of the portfolio. And we can see that now that this portfolio, we are almost 4 years into this. In January 8th, 2022, we will be 4 years into this portfolio. And this portfolio will probably have generated roughly $3,000 in dividends by that time frame. So that's pretty crazy to think of it here. Just kind of looking at how much this portfolio just created a few years ago has made in dividends along that journey. And we've just continuously added bits by bits every single week, maxing out our Roth IRA on a yearly basis in order to get where we are. So jumping over into the 1 week performance, here we can take a look overall for the week. We had a really positive week along with the other indexes. The S&P, we'll take a look at the markets here in just a second, but our return here for the portfolio is up 2.19%. Most of that, in market gains of $845, and looks like we did sit through a few ex-dividends last week, which made us $17.23 of future paid dividends. So this is just earned dividends. You sat through an ex-dividend. I'll probably get paid it in the future by a company, but it wasn't added to the portfolio yet. So overall, pretty good for the 1 week. If we compare our performance to the S&P 500, we're right in line with the S&P 500. We had some really big movements this week. The Fed came out on Wednesday. They made their announcement talking about how what is it called? The inflation is in transitory. So that was a word that they had used to kind of showcase that, they're not worried about inflation running out of control, rising too fast. They're continuing their tapering program here in November, and they're going to be cutting back on bond buying going into potentially like mid 2022 or late 2022. So we're going to have still money in the market getting pushed and bought up. So the market may still go higher for the next 6 to 9 months. It'll just have little swings in between where we'll see some red days, some green days. And obviously, I would like a bit of a pullback myself of anywhere from 5-10%. We did have a bit of a pullback just recently, but I want something a bit heavier. That's something I want. But overall, the S&P 500 is up 25.07% year to date. We have the Dow Jones up 1.42% this week alone. So really nice there again. Fed came out. That helped all the indexes there with the Fed announcement there. And then Friday, big upwards move here early on. It lost a little bit of momentum here towards the end. And then we have the NASDAQ here up the highest over the past 5 days, up a whopping 3.05%. So that is a huge move there on the NASDAQ. And I see Facebook recently kind of picked it up this past week. So if we look at the S&P 500, take a look at the 1 week performance. Facebook this week really helped out the FANG stocks, helped out the NASDAQ. It is up a nice 5.43%. And, over the last 3 months, I've been kind of watching Facebook. It's still down over the last 3 months, but it's been on my my radar as far as potential stocks to buy that are growth companies. We can see the rest of the FANG stocks with Tesla bouncing over $1,200. So this one, not too long ago, was priced around $600-$700. I know I had a couple comments out there from, it may have been Scott or a Jab to Finance. Shout out to both of you guys. But I know one of you guys is like, it's not too late to buy into Tesla. But, Tesla is crazily priced at the moment. So it's not something I would feel comfortable buying at this price. But I know Tesla long term, they're involved in a ton of products, a ton of services, and it's not just a electric car company. There's a whole bunch of components on top of it that make Tesla. And then you have the CEO on top of it. But he just announced over the weekend he had a poll of if he should sell a certain amount of his company or a certain amount of shares this weekend. So that may potentially impact Tesla, the company, on Monday when the markets open. We'll see how it opens up on Monday. Amazon up nicely, 4.35%. Amazon in itself hasn't done a whole lot over the past 1 year. It's up 5.93%. Of the FANG stocks, Amazon has had the least amount of growth. So 5.93% there. So we see that it's essentially been dead money over the last year. And it's recently, as of this past week, kind of put on the most that it has in that time frame. Facebook, again, we already kind of discussed that. Apple up nearly 1% and Microsoft up 1.34%. We also saw Nvidia putting on a 16.37% gain there on the week. Qualcomm up 22.54%. Qualcomm was one I had looked at. I don't know why I didn't buy it, but I remember a couple, maybe months, half a year ago, I had looked at Qualcomm, looked over, their revenue, net income, earnings per share. Everything had looked pretty positive. They were in a dip, and I just didn't make any sort of movement there as far as buying it into my portfolio. But overall, not a bad week. Again, markets were up over 2% for the S&P 500, but we see some weakness down in the banks. JP Morgan down 1%, Bank of America down 1.7%. This is probably because of they're not going to be raising rates. Everything is the Fed's not going to be coming out there and raising rates, and that's kind of negative for the banks themselves. So that's probably why they were a bit negative this week versus positive. So jumping back over to the M1 Finance portfolio, we've covered the overall performance. We've covered the weekly performance. As far as the activity, we really haven't bought anything as of October 25th. And that was what? Now about 2 weeks ago. So the last time that we bought anything was Hormone Foods and Colgate. So we really haven't bought anything. We had a few companies pay out dividends. I believe these were about $25 in dividends. We just made another live video not too long ago. So we recently had about 25 dividends, $25 in dividends come paid to us here recently. And then we have the capital that we put in every Friday. We deposit $201.42 up until the very end of this year. And that will help us completely max out our Roth IRA. So we have a little under $1,500 left to invest in this portfolio in order to max it out. So if you guys have any questions, definitely let me know there in chat. So at this point, we're going to go ahead and take a look at our holdings. Now we have 30 positions within this portfolio. I had sorted these alphabetical and I put them in here alphabetical, started with Apple, going all the way down to Walmart and WP Carey. And I went ahead and inputted them into Y charts. Now this is where I generally get my information pretty quick. You know, it's pretty quick to kind of just pull data in. And here, all we're going to be taking a look at here is over the past 1 year, I'm going to go ahead and just kind of look, where are these at trading at the moment? Let's see here. I'm going to go ahead and just bring in a few variables. We probably don't want to look at revenue, net income at the moment. Yeah, we'll look at that afterwards. Yeah, I'll look at those ones afterwards. Right now, I want to focus on the current price, the 200-day, 50-day moving average. And let's go ahead and take a look at their current trailing 12 months for their earnings per share. Are they going positive? Are they going negative? And I just want to kind of see where a lot of these companies are at in the moment. You know, where are they at the moment? And we'll take a look at them over the past 1 year. So we'll go ahead and quickly go through the current price, the 200-day, 50-day moving average, and where their earnings per share has been over the past 1 year. And we'll see which one's better to look at here. Maybe 3 year or 1 year. You know, it's all the same data. So I'm going to go ahead and go with 3 year, because then we'll be able to see these companies over the last 3 years. You know, we started this portfolio nearly 4 years ago. So if we look at this 5 years, that's a little bit harder to kind of see. So I'm going to stick with 3 years. We can kind of see the earnings per share growth for Apple, their price here along. So price is in the purple. So anytime that purple line had dipped below that 50-day moving average, it hit the 200-day moving average. It got quickly bought up here and rebounds higher over the 200, over the 50-day, and just Apple generally trades above that 50-day moving average right here. And recently, about a month or so ago, Apple had a bit of a dip, broke through that 50-day, went all the way down. That green, not the green, it didn't even reach the 200-day moving average. So it kind of fell to about 147-ish and then kind of bounced back, and now it's kind of trailing back up. And then its earnings per share here has followed along. I think there was a big cycle. You know, I went from an iPhone 6 to an iPhone 12 recently, so that's a huge difference. Hey, Copper State Treasures, welcome to the stream. Welcome to the live event here. Yeah, I'll take a look at Microsoft here towards the end. That was one. I know a lot of investors are invested in Microsoft at the moment too. Avi, we'll go ahead and just kind of go through these really quickly. So Avi here, I know this one has been on fire. It had been a while. You know, it was stuck below 110 for a while, and recently had a huge run up going into 2021. So it broke over 110, has traded within 110 to 117, had a big dip here recently during that little, you know, I'm going to say pullback here recently, but it wasn't a huge pullback. It did break below 110 at one point and then kind of rebounds back up at 117. I think Avi at this point is not worth buying into at the moment. It's kind of in this little path right here. So I'm not worried too much about Avi. I'm looking for some opportunity right now. Say Abm Industries. It just recently broke. A lot of these companies are going to have recent breaks because of the recent recovery. So Abm Industries, it fell below its 50-day, fell below its 200-day there just for a smidge. It's back, climbed back over its 50, retraced, had a bit of a double bottom right here, a lower double bottom, but broke now above its 50-day, 200-day moving average. And we see here that it had a crossover. So we have the 200-day, if we zoom in here at the 3-month. So we have the long term kind of breaking above the short term. So this is kind of, is that a golden cross? I forgot if it's a golden cross, but that's showing pretty positive as far as being able to break through the resistances and kind of make it above. So this could be a potential run up from $48 to, $50 or continued moving higher from there. So Abm Industries is not a bad one to look at. Also, I'm curious if your thoughts on Tesla. I just talked about Tesla. I don't know a whole lot. I know that they have a lot of opportunity in the future with their automated driving and, the taxi services and such. But as far as them continuing to rise, I think they're a bit risky. Like I talked about them just smallly, very lightly. I myself wouldn't buy into Tesla at this price, but a lot of investors are buying into it, obviously. I'm more of like an opportunity buyer myself. So I'm always looking for, hey, where is something that was beat down here recently that could be tracing back up here in the short term. So Cardinal Health, for example, this one had highs of 60. It has been being beat up recently. Why is it back down at $49.54? So a lot of the other companies recently fell and broke apart within the last month or two, but they've retraced higher. So Cardinal Health isn't following along with the normal market that we've currently looked at. They broke down, but they haven't broke back above that $55, $60 mark. So Cardinal Health for myself would be something. Why is this one not bouncing back higher? Is something kind of stopping it, or has it just not happened yet? So this could be an opportunity buy for me to kind of look at. Their earnings per share is obviously moving higher. Yeah, I am too on Tesla, has been riding. Think it will split here soon? Yeah, they split recently. I'm not sure if they'll split up again. I am not sure on that one. That would be an interesting one to think about and see if they would split. So Colgate here, they recently had a bit of a big dip here. I know I recently started buying into Colgate around in the lower 70s. This one looks like it is tracing up higher. So it had been trending for quite a while, trading below its 200-day, trading below its 50-day moving average. Here, now the price hit, it broke above it for a smidge, fell back down and broke, and now it's kind of in a breakout status. It's kind of hit the $79.21 mark right here. If Colgate can break above this and stay above it for quite a while, we may see a golden cross right here as the blue line crosses back over the orange. So 50-day moving back over the 200-day moving average, that's a big plus for Colgate. Earnings per share wise over the past 3 years has been trending higher recently with the, it's been kind of trending sideways, and I'm not expecting a whole lot out of Colgate. People buy their toothpaste, a lot of the other household products, so it's not going to have gigantic moves in the market. It's just kind of consistency. Clorox here. So Clorox, this would be one to kind of look at. A big dip here in their cleaning products. And coming out of 2020, what can you expect? Huge uprise, probably out of nowhere. So over the last 5 years, this company had trended in their earnings per share just slowly. Slow growth there, just very slow. 2021, what did we have in March of 2020? A lot of people were going out there buying Clorox, buying those wipes, buying disinfectant, buying the hand sanitizer. So their earnings per share got pushed up higher. Their price got pushed up higher. So now Clorox is just trying to find a bottom. They're trying to find themselves out right now. So I'm not going to be buying any more Clorox at the moment. I think that they're just kind of in a hold status until we see them starting to kind of bottom out. So we're kind of seeing some bottoming out kind of happening with them right now. They, for the first time, broke above their 50-day moving average here. They're kind of tracing back down. If they can break above and stay and then keep trending higher, Clorox could be one to kind of look at and potentially add more of. Cisco Systems here, going back over to the 3-year. And Cisco Systems, this was just one that kind of trends within this line. Over the past 5 years, this one just sort of hits around 60, breaks down to back 40. It just kind of does this dip style. I know I bought back into Cisco around 40, 50 and just kind of held it at the moment. So This isn't one I'm going to be looking to add anytime soon. Digital Realty Trust, going back to the 3-year here. Kind of an interesting dip here in 2021 and kind of bouncing back. So it doesn't look like any sort of opportunity there for that one. Essex Property Trust. This is a real estate investment trust right here, kind of fluctuating earnings per share, but earnings per share for REITs don't matter. You'd want to look at the FFO, funds for operation. So this is one kind of interesting, kind of just staying in line, but the price isn't an opportunity buy at the moment. Hormone Foods. This is one that I recently added into my portfolio here in 2021. I bought it. I'm not sure what my unit cost is here on Hormone Foods. My average price is $45.05. So it's at $43.21. So I kind of bought it around, maybe this dip back here in early 2021. I don't believe so. I think I've been kind of buying it here recently, and I'm just kind of waiting for opportunity. We can see here in the short term, it recently broke above its 50-day moving average. It's been kind of below it for quite a while. Recently broke above it. We'll see how it kind of moves here in the short term. If it can keep pushing up, break above that 200-day moving average, at that point, it'll be worth more, buying and holding more of it as it continues to break higher. IIPR, Innovative Industrial Properties. This is another REIT within the MJ industry. So this one just continues to move higher and higher. Really nothing wrong with this one. No opportunities within it at the moment. Johnson & Johnson. This is one that took a bit of a hit early on with their, between Johnson & Johnson, Merck, and Pfizer. Pfizer, as far as the shots and stuff go, is the clear winner. Johnson & Johnson was kind of pulled out, and this one we can kind of see, this one is kind of like downtrended for quite a while. And Johnson & Johnson is still a great company with a lot of their other products, but if we look here in the 3-month, it has kind of trended below its 50-day 200 moving average. If this one can kind of break above its 50-day and then kind of hold the line and break above its 200-day, and then we have a golden cross, Johnson & Johnson could be worth buying back into, where this one could kind of move back into 180 and continue trending upwards. The price itself just generally kind of trades slowly to the upside, but we have a bit of a dip here just recently. So I'm just kind of waiting, but Johnson & Johnson could definitely be worth kind of adding more into for the long term at this price, and just kind of waiting it out for it to move higher. We have JP Morgan here. Just nothing wrong with JP Morgan. JP Morgan's a great company in itself, one of the largest financials, not just regional, but just all around. Just no opportunity there. That one's trading at near all-time highs. It's quite above its 200-day and 50-day moving average, with its earnings per share just moving really nicely there to the upside. So no opportunity there with JP Morgan, just really solid there. Kimberly Clerk. This is one that I feel, I don't know about this one. I invest in Kimberly Clerk, but it really hasn't done a whole lot since mid-2019. It's just kind of been in this line. I don't know where it's at as far as the portfolio. Let me go look real quick. KMB. It's moved up 2.42% in the time that I have bought this one. So this may be one where I have to look at this one and just, is it worth staying in it for the long term? Its earnings per share has been falling very slowly as of mid-2020. So this could be one where I may just want to cut my loss. I'm not really losses on it, but I just may want to cut it out of my portfolio, thin it out, and replace it with something with better growth opportunity out there. So I'm going to go ahead and just make a note of that in my notepad. To not buy any more of that, but I'll probably remove that from my portfolio and kind of replace it with something a little bit better. Lockheed Martin here, ticker symbol LMT. This one I did buy more of. I saw a lot of investors here recently buying more of Lockheed Martin. And let's see what's with its earning per share here. I forgot what it was. There was something in its recent earnings, but we can see that it has dipped here quite a bit, but I don't know off the top of my head. So this is something, I remember it wasn't anything negative. I think they had won a contract here recently, but something with their earnings per share kind of shot them down. And we can see here, Lockheed Martin had a nice quick run up and then just boom, lost it from mid 370s all the way down, breaking very quickly below its 50-day, 200-day moving average, breaking 330, but then at 330 and below, really quickly picked it up to 339. So actually at this time, if Lockheed Martin is in a big position, I have, okay, so it's nearly 2,000 in that position at right now. It's down investment-wise, not including dividends. It's kind of negative at the moment, but that wouldn't be a bad one, if I were to look at that one. So I have Lockheed Martin, and oh wait, actually I don't have anything else that I've written down there. LMT. I'm just going to write this one to buy, or potential buy within the portfolio. Lowe's here, very nice as far as nothing's really wrong with Lowe's when you're thinking of opportunity, or just if you're thinking of like household things to do around the house. I always go to Lowe's myself. Lowe's or Home Depots. Those are really just the places you're going to go to for your craftsman equipment and tools. If you're not going to really order a lot of stuff off Amazon, if you're going to be doing a lot of handsy stuff, you want to be there physically, look at the products, and buy it. Plus, just kind of get help doing specific tasks sometimes, I think. And then the company itself has been doing great. So price really nicely, near all-time highs, quite a bit above its 200-day, 50-day moving average. And its earnings per share here also having moved within that time frame really nicely as well. So we're taking a look here at the 3-year. Just continue to growth, overall growth here for the company. So nothing wrong with Lowe's at the moment. No opportunity there. Main Street Capital. This is a BDC, business development. So this one I kind of added into this one, I believe sometime recently in 2020 or 2021. And it just has been on fire recently. So, it went from mid or negative in the portfolio during 2020, and now it's third. It's the third best one in the portfolio now. So, really interesting one right there. Method Electronics, this is one I kind of added to recently in 2021. It's kind of been fluctuating. I don't think there's anything negative in this one. It's just a bit of a small market cap company. I think it's around $3 billion. So it has recently broke above its 50-day and 200-day moving average. This is one that maybe is kind of like in a breakout. You can see here it kind of broke down in September 2021 and then recently snapped back. So maybe some earnings here recently kind of put them back on people's target, and investors are kind of buying back into this one. So it had been kind of trending sideways as of June. But opportunity there, during this little snap in September, that probably would have been the best time, but I just didn't look at that one at that time. 3M, this is an interesting one right here. So I know a lot of dividend investors are pretty into 3M, being one of the ones that makes the masks. The during 2020, big, supply of the masks that were ordered. I can't think of the name at the moment, but here recently, as of September, just downtrended for quite a while, had a bit of a dip right here, double dip, found some support around 180, kind of bounced. It's kind of fighting that mark right here. It's kind of fighting the 200-day moving average here, 50-day. It's going to fight through this 182.40. If it can break above it and kind of stay, this could be an opportunity. Obviously 3M is a long-term company. So when you're looking at opportunities like this, where it kind of dipped here, let's go back over here. So it really hasn't been at this 181 mark. See, midpoint 2019 to midpoint 2020, it kind of was in this range, and then it kind of broke higher. So looking at it longer term, maybe not. Maybe it's not something I would invest in for the next 10, 20 years. So this is one. I think it's a great company overall. They obviously have a ton of products, but maybe it's too big. Once a company becomes too big, it just kind of implodes in itself because it can't grow without spending a whole lot of money. So this is one I may kind of mark with Kimberly Clerk as far as just a really slow grower, and maybe potentially just trim out of the portfolio. Nothing wrong with the company itself. It's just there's better opportunity out there. So I'll mark that as far as maybe a trim position. Altria here. Altria is no longer in my portfolio. I am not invested. Do I still have Altria? No, I do not. Yeah, I do not have Altria. I sold out of that one long ago. Not interested in that one. I just felt so much negative. As far as I don't smoke myself, have never smoked. I know they have other products as well, but you know, I don't believe in Altria long term. Where 5, 10 years from now, I don't know where they will be. I don't think they would be positive versus negative. Merck here. Merck has had recent explosion, so no opportunity there. Wouldn't buy it at this moment. I'm just kind of holding out on that position at the moment. Realty Income. Nothing wrong with that one. Just continuing to trend very nicely. If you had bought that one during this huge downtrend, that would have been the best opportunity. But it looks like it's kind of nearing these all-time highs, and just all around great REIT to buy. Pfizer, this is obviously one. I saw something around Facebook recently where it said like 70% of Congress had owned Pfizer. I don't know if that's true or not, but a lot of investors who are adding into healthcare really only buy into specific companies. You're going to buy either Pfizer, AbbVie, Johnson & Johnson. What other ones did we have? Basically, you're going to be buying the exact same ones as other ones. So Pfizer, Merck, Johnson & Johnson, AbbVie, Abbott. Those are going to be like your big dogs you're going to buy if you're trying to buy into healthcare. So no opportunity there in Pfizer. Sigi Selective, ticker symbol SIGI. This one hasn't had any faults here as of last year in 2020. The Southern Company, utility company here. This one, see, over the last 10 years, how's that been? So kind of interesting to watch. I'm not sure. Generally, utility companies kind of move up and down within this range. Here in 2020, had a big spike. Kind of going into 2020, big breakdown. Recovered, not all of it. Kind of recovered halfway since that high of 670. It's kind of been trending in this $63 mark. So again, this one could be another one to kind of add to my chalk block. I'm really trying to keep it healthy. Keep healthy companies within there that are continuously growing. So this one, I'll have to look at this one a bit more of as far as, where is its revenue, its net income, earnings per share kind of going long term. Read more into their financials. Simon Property Group. This is another one I had commenter on. So I had someone mention it. Scott. Yeah, so Scott mentioned it here. Simon Property Group, they've been on fire recently. I myself, yes, they've been on fire. They really have been picking it up since the dip back in 2020. I sold out of them when I had moved back into the positive. I probably won't buy back into Simon Property Group just because I don't want to be invested in retail positions long term. Look at this. I'm not going to be buying back into this one at 170 for sure. That is back up near its 3-year highs. So I bought it and I was essentially I sold it and I was essentially flat. I hadn't made any money, hadn't lost any money. I was happy with it, and it's definitely recovered very well, but just not a position I myself am wanting to buy back into. We can see, as far as earnings per share, they fell all the way down to below $4 per share, but I've recently been picking it back up. So that's really good for the company to see that. So, congratulations everyone out there who did hold on to Simon Property Group. I was not one of them. Stanley Black & Decker, this is one interesting to kind of watch over the last 10 years. Just nice, steady growth. 2020, that hit all companies just about the same. I have to go, but thanks for the advice on Lockheed. Have a great night. And we'll take a look at Microsoft real quick. I just want to go ahead and just grab that one real quick. Since I should have done these sooner here. Microsoft. But we'll look here really quickly there. I know this was one you wanted to quickly take a look at, so I'll spend just a few seconds here. But as far as Microsoft goes, we already know that they're trading near all-time highs. We are moving to Azure. We use a lot of their products myself. I work in infrastructure and IT, and anything operating system-wise is either Microsoft, where we're using them for the Azure, for a ton of tools. Office 365, Azure for the cloud, We're moving, the exchange online. There's a whole, Microsoft offers so much more than just its operating system. And as far as like their price wise, it's not, if you're just buying into Microsoft, as long as you're not throwing heavy amounts into it, like you're just going to be investing everything you have into it at this moment, it's probably a good time to just dollar cost average into it. Just start with a small amount, bite, because this company still has a ton of growth for it in the future. Its earnings per share doesn't look to be or going to be cutting back anytime soon. And if we look at their other pieces here, their revenue, net income, and their price to sales and PE going forward, we can see here revenue. Let's look at them 10-year wise. Revenue just kind of shooting up to the moon here at 176 billion. Their earnings per share, where's the earnings per share here? In the pink, just hit a huge explosion after 2019. I think this is the point where they kind of transition from you're buying their products at a one-time cost, and they went more to the not perpetual, but the license, where you're kind of buying it every few years. You're kind of paying for their services on a monthly or yearly basis, and that helped out their revenue and earnings per share here, also kind of climbing here at $67 billion here now. Earnings per share or PE ratio seems kind of high at 36.7, but that's just Microsoft in itself. So I don't see a lot of opportunity if you're just kind of buying a big chunk of it, but if you're just kind of starting to buy it right now and just kind of averaging into it, could be worth it. It's not one that I myself am buying. I obviously own the S&P 500, and that kind of buys into the Microsoft there alone. Let's go ahead and go back to these price, 200-day, 50-day, and earnings per share. And then we will go back to Cisco Corp. Cisco Corp here, food company, food delivery service. I know they deliver food all over the U.S. for a lot of the restaurants and businesses here. A bit of a dip there with their earnings per share. So this is kind of interesting, into 2020. This is a lot of the shutdowns. Obviously, when restaurants, businesses are shut down, they no longer need food delivered to them and other stuff. Cisco's going to suffer. This one suffered with their earnings per share dipping. Luckily, their price obviously kind of followed along, but their price has recovered quickly versus their earnings per share. And now their earnings per share is starting to pick up. So a lot of investors kind of watch the price move back up, but it really hasn't gone anywhere in this time frame. So as we see this quarter after quarter kind of trending higher and higher as businesses and restaurants are kind of opening back up, everything's kind of hoping to get back to the normal. This one could just kind of continue trending higher. I don't see any opportunity at this price right now. It's not any lower than it was in the past. With this earnings per share moving lower, I would have liked to have seen that price stick down in the 30, 40s. That would have been really good, but it just hasn't. So I'm not going to be buying in the Cisco at the moment. Ugi Corporation, this is a utility. Really nice recovery here. That's what's it here? 5-year. Okay, really fluctuates there with its earnings per share. So big fluctuation to the upside, big fluctuation to the downside, and then upside. So their share price kind of moves in this pattern where it goes up, and then it follows the earnings per share down, and then it goes up. And then, if this is the pattern, we may see a downtrend here with their earnings per share into the future. So what is the trend here? It goes higher in the spring, summer months, and then in the fall, winter time, it looks like it goes lower. And then we had 2020 happen, so that didn't go higher during that time frame. So it's kind of interesting, one right there. I kind of add that. My Southern company also got added into my chalk block, so maybe I'll add this one in as well. Utility company there. Walmart's always been a pretty interesting company. I know they had a big run up here recently, back in not too long ago. Yeah, they were right around May, June. Big run up from around 140 to the 150s. Trended back really sharply recently within the last month, and then look at the recovery there from 136 all the way up very fast to 150. So that is really crazy with Walmart. I don't see a lot of opportunity there, but I do see that their earnings per share has been dipping. So going into 2021, earnings per share for Walmart has been falling very quickly. So this would be one I would be kind of, I would myself want to do more research in. Why is Walmart earnings per share falling so fast? What's causing this to happen? Their share price has also been kind of trending in this range. So I would want to do a little bit of research into Walmart. Why is their earnings per share falling? Is their share price going to follow along and fall as well here? Right now it's kind of maintaining, so this could be an opportunity where you look into why is it falling? Will it continue to fall? Is it going to be in a recovery? And then either sell out of it just because the share price is going to fall in the future and look for opportunity to buy back in, or just kind of hold and stick with it through in the tough times there as well. And then finally, we have the last one here, WP Carry. This one, not trading near all-time highs, but it is trading above its 200-day, 50-day moving average. It had a bit of a dip there with its earnings per share going into 2021. It is showing some signs of recovery. So we could see here recently, probably with their recent earnings per share report, that really helped out the company kind of break above that 50-day moving average. And I don't see WP Carry. So this one is, since I bought it, it's up nearly 25%. So not a biggie there. So kind of looking through here, I saw opportunity with Lockheed Martin. That was one I kind of added in there. And there was another one early on that I had potentially seen some opportunity with. I forgot which one it was though. And then if you guys are out there in the chat, definitely say hello. Oh, Cardinal Health was the other one that I kind of saw here. But maybe that wasn't it. Let me go look at these really quickly again. I'm just looking for something I can kind of buy into. Right now, I feel comfortable buying in the Lockheed Martin long term. I think, that price, it still hasn't recovered all the way. But then there was another one that hasn't recovered that's already in the portfolio, kind of got beat here. Cardinal Health could have been it. I mean, there's nothing wrong with this one. It kind of got beat down in the short term here, but it's been downtrending for quite a while. So I'm going to wait on that one. Colgate. So Colgate was another one I don't mind buying just a bit more of. It's in that recovery phase, it looks like. Cisco, I didn't see anything good with that one. Essex. Hormel. That one's kind of breaking out as well. So let's see, Hormone Foods. Again, these aren't going to truly break out until they cross over the 200-day moving average. And we have Innovative. Yeah, that one's not going to go anywhere at the moment. Johnson & Johnson, JP Morgan. A lot of these. Yeah, Lockheed Martin. I'm kind of interested in buying up this one. It's back down in those low 330s. It could quickly recover back above the 360s, even break back near 390 and higher. So I don't have any problem kind of buying back into that one. And kind of looking through here, I was seeing if there was another one. But I think that's good. So let me look at the comments real quick. Anybody out there want to mention any companies to take a quick look at? Otherwise, I'm going to go ahead and make the buys here on Lockheed, Colgate, or Hormel. So jumping over to the M1 Finance portfolio, and I look up Colgate, CL, I have 1900 in that one, and Hormel, I have 1800, and Lockheed, I have 1900. Clean. Lockheed and Hormone Foods. So back over to the portfolio, we're going to go ahead and split this even down the middle. We're going to go divide by 2. That's 213.68 into Lockheed Martin. So I'm going to go ahead and buy a bit more of that one at these prices right now. continue and confirm. And then we're going to go ahead, go back, and we're going to go ahead and get Hormone Food. Select that one, buy remaining pieces of with the remaining amount of cash, like so. So everything will be invested here. We're just continuously add money into the portfolio. We want to get it invested right away. You know, we don't want the capital sitting in there too long. Anything that we deposit into these accounts, obviously we want to invest it right away. That's what it's there for. And if I look at my holdings and I look at the unrealized gain, I want to look what's negative at the moment. So yeah, Lockheed Martin is down by 0.27 and Cardinal Health is down by 0.14. So yeah, they are potentially Cardinal Health, you know, that's actually not a bad one. I want to do more research into that one. So I wrote that one down too. So I'm going to be looking into Kimberly Clerk, 3M, the Southern Company, Ugi Corporation, and Cardinal Health to see whether they are worth kind of sticking it out and buying into. So I want to look over the recent reports, and then I want to look at Walmart to see why they've lost their earnings per share so sharp, you know, so much recently, and if their price is going to follow here in the short term or it'll recover. So hey everyone, thanks for joining into the stream for sure. Benito, thanks for saying hello. Cooper, definitely appreciate the questions and saying hello. Anybody out there watching, thanks for tuning in. If you guys have any questions at all after watching this video, definitely let me know down in the comment section below. What stocks are you buying right now? I'm actually interested in seeing what other investors are out there buying, just because I've looked at the market. You know, I've been watching the market, looking for opportunity, but I'm just not seeing anything that's just, you know, what's catching my eye right now. I'm not wanting to buy into AT&T any longer. I did see it was down to the 24s here this past week, but you know, year to date, this thing is getting beat up here. Verizon's down nearly 11%. I'm kind of done with telecommunication in my portfolio. I feel pretty comfortable with everything that I'm currently invested in. Obviously, I would have loved to invested more into financials. JP Morgan, Bank of America, check that growth year to date. And Microsoft, Google, Facebook, Tesla, that's a huge amount here. Just year to date, Tesla alone is up 73.18%. So that is crazy. Hey, Marlon, welcome to the stream. Thanks for the thumbs up there, saying hello. And yeah, definitely let me know down in the comment section below. Are there any stocks out there that you feel are comfortable buying at this time here in the market? What do you think the market's going to do here in the short term? Do you think it'll go higher? Do you think it'll go lower? I think the market in itself is going to continue to go higher, just it'll, you know, week by week, just little bits. It may have a bit of a pullback, anywhere from 5 to 10% in between now and the next 6 to 9 months. But I don't think we're going to see anything crazy happen, at least until that time frame, until all the money, the Fed stops buying up everything. So that is everything for me. If you guys are brand new here, once again, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. If you guys have any comments or questions, want other video topics discussed here on the channel, definitely let me know. I've also started up a second channel. I don't know if anyone would be interested, but I definitely do another channel that I started recently was Unchallenged Gaming. I stream online with my son or myself, playing games, having tutorials on creating applications with Unity, also Minecraft information, and a couple other streams as well. So just kind of starting other little side hustles, I suppose. So that is it. Thank you all for tuning in. I will see you guys next time. Bye-bye.